Hi, my name is Darren Joseph from HTJ.tax. We're the team that seeks to demystify this sometimes confusing world of international tax and the privilege of having a deep conversation with Mark. Mark, can you please introduce yourself?
I'm Mark Morris. I'm based in Switzerland. I've been here for about 26 years. I've specialized in automatic exchange of information, which originally was the EU Commission's EU Savings Tax Directive. And that went on until about 2014, and they scrapped that and they adopted the OECD's FATCA made into CRS.
So can you share with us what it is you do professionally?
Primarily, I provide custodial services for trusts to hold underlying entities or partnerships or unincorporated funds. So what I do is I provide the administration services for the custodial. I don't do the actual custody. And later on, I'll explain what administration services for custodial is. And I'm an expert in CRS and CARF, and I certainly know the intricate differences between CARF and CRS. We'll get into that in a later question, okay? I've published over 600 articles on LinkedIn, and I'm still writing about 10 a week. And I don't see other people covering 99% of the topics on CRS that I cover.
Okay, thank you. What are your thoughts about the irrevocable trust structures available in Singapore? What are your thoughts?
That's absolutely disgusting. Singapore said if it's irrevocable, which most trusts are irrevocable, then the trust can report zero. Now, why that is so wrong in so many ways, automatic exchange of information is not to catch how much income you actually made, etc. It's to catch, do you have money overseas? And therefore, everywhere else in the world, a trust would say, this guy settled 2 million, 10 million, whatever. And then the bank can ask, where did that 10 million come from? Was that originally taxed? Likely not, because that was set up before there was automatic exchange. So it's amazing that Singapore allows this zero reporting for irrevocable trust. And I've written some articles, but everybody seems to agree, even if a country gets back a zero from a Singapore trust, that should be enough for exchange on demand. Well, no. Okay, you said he's got no money, but how much money does he have? Asking exchange on demand. I don't know if countries are actually doing that or not. I've never heard that. And some people said, yeah, it's a reason for exchange on demand. But I somehow highly doubt, and I've never heard anybody asking Singapore, please, the trust must give us how much was settled, even though they reported zero.
So the trust can report zero, but the financial institution that's holding the account would know because they have their KYC, they have the AML procedures. And this is even for accounts that, as you said, predated the whole CRS. So to some extent, there is some sort of check and balance in the system, or not really?
Not really, because the banks don't report. Remember, the core principle of CRS and FATCA is if a financial institution is holding the account of another financial institution, such as an investment entity, it's not up to the top layer financial institution to report. They just step back and say, yes, you've given us a GIN, that's the end of our involvement.
Right, so the trustees will just submit GINs and...
Okay, it's different to the other one. There they actually submit zero because it's legal, whereas the others just illegally report zero. The shell bank loophole.
Shell bank loophole. Okay.